Oil prices are heading higher on the final trading day of the year, but it's still on track for the first annual decline since 2015. Joining me now, Lipow Oil Associate President Andy Lipow. Andy, what have oil prices been telling us that the U.S. economy, certainly the world economy, is weakening, but that the U.S. economy is in worse shape than we might expect in the new year?
Well, I don't think so. I think the fall in the oil prices is really due to the increase in supply that we've seen and attribute really to the U.S. shale revolution, where we're now producing at an all-time record of 11.7 million barrels a day. But really what the oil price on the flip side is telling us is that the rate of growth around the world and oil demand is slowing, and that is what's pressuring prices and may lead to a slowdown not only here in the U.S. economic growth, but also worldwide.
Hey, Andy, Mike Block here. So oil made a high on October 3rd. What really changed in the supply-demand dynamic in the less than 3 months we've seen since then? What happened here?
Well, I think there were a couple of things. Of course, U.S. shale production rose, and in anticipation of the Iranian sanctions, the U.S. asked OPEC and non-OPEC producers to increase production, and they did. And as a result, we saw Russian oil production reach a post-Soviet Republic high of 11.5 million barrels a day. The same thing could be said with Saudi Arabia. But then the U.S. goes ahead and issues waivers, so there's more oil on the market. And what actually also crept up on the oil market was the fact that supplies recovered in Libya and Nigeria because we didn't have the violence and sabotage that took oil off the market. So it's the combination of all those things that really were out there, but all of a sudden it was this confluence of events, and oil started to fall since October.
Hi, Andy. Maddie Doppler. The last time we saw a precipitous drop in oil was in 2016. And then 2017, of course, banner year for markets. So does this drop show us anything about 2019, augur any positive news for the stock market? What do you think?
Well, it's really hard to say. I would say one thing about the falling oil price is it results in deflation. And if we have deflation, that's likely to make the Fed pause on interest rate hikes, and that would be beneficial to the stock market. But on the other hand, these lower oil prices certainly are affecting the economies in the oil patch. You're certainly seeing a slowdown in capital spending in Texas as well as in Canada. And both of those are really, economic engines for both of those geographic areas.
Well, maybe, Mitch Rochelle, that now that Russia and Saudi Arabia realize they got played by President Trump in the United States, and I mean that in a good way, I mean that as a compliment, then once that they, as we're starting to see cut production, then we get a real bounce back in oil prices. That actually helps those parts of the country that Andy's talking about.
Yeah, and to that point, Andy, I'm looking at the Wall Street Journal reported a story about capital expenditures in the shale industry. If we do slow down CapEx spending in the shale industry, can that be ramped up quickly if, in fact, the oil prices spike and there's an opportunity to produce more again?
Well, I think it can be ramped up, maybe not so quickly, but we do have a significant amount in the thousands of drilled but uncompleted wells. So those could be brought on quite quickly as oil prices rose. But when you start idling drilling rigs and laying off people, it's difficult to get those people back to work. And especially in today's tight job market, people in the oil patch have been burned a number of times, especially since 2014. So they're really reluctant to go through these boom and bust cycles, and put their livelihoods at risk once again.
Andy, great to see you as always. A happy new year to you, sir. Thank you for being here. Andy Lipow,
Thank you, and happy new year to yourselves.